This is Mark Santero, President and CEO of the Homestead Funds. I appreciate the opportunity to share with the directors at the annual conference Homestead's Managing Risk and Growing Capital, the potential role of directors. To give you a little overview, the Homestead story is inspired by cooperative values. We were created by NRECA to meet the investing needs of America's rural electric cooperatives. Our history is over 30 years old. We celebrated our 30-year anniversary in November of 2020. We have an experienced group of tenured portfolio managers that oversee our mutual funds. Our disciplined approach to investing, RE Advisors, who's the investment advisor of the Homestead Funds, are money managers that take intelligent risks that we believe will reward shareholders over time. We do take a long-term approach to investing. And efficient, that comes into play. We have competitive and transparent fee structures. So directors need to know that you have an important role in looking at your cooperative's investments. It's important to know that Homestead Funds were created by co-ops for co-ops over 30 years ago, and we share those same concerns about investment risk and return. So, what's our discussion point for directors today? It's managing risk and growing capital for your cooperative. One of the electric cooperatives directors' responsibilities is guiding how the organization's money and assets are used to fulfill your mission. What does that all mean? First, you need to assess and segment your balances. Not all balances are created equal. There are different needs for certain balances that you have at the co-op, short-term, long-term. So you need to determine what the liquidity needs and the risk tolerance levels of those assets are. Your short-term assets, preserving principal to meet short-term obligations, managing that liquidity and not putting those assets at risk. So, and you constantly need to review to ensure that your strategy is in line with your objectives. Conversely, to the short-term example, you may have longer-term assets that you don't need right away, 3 to 5 year type of time horizon. You may be a little bit more inclined to take additional risk. So your strategy needs to be formed, but you constantly need to review that strategy. And obviously, it goes without saying, you need to adjust if necessary. 2020 was a prime example of looking at whether you had short-term assets, intermediate-term assets, or long-term assets that your co-op has in different types of investments. 2020, and once the pandemic hit, we spent the majority of our time at the Homestead Funds talking with cooperative leadership about what your strategy was, does it still hold true, and how can we help, if necessary, to adjust that strategy. So let's put that in context. I mentioned balancing risk, liquidity, and return. This is a simple chart that shows different account types based on specific functions, time horizons, and liquidity of assets. I literally broke it down between a 9-month segment, which I would call short-term operating cash, working capital, then the 9 months to perhaps out 3 years, which is managing those reserves. In that time horizon, assets that you have put away for strategic improvement programs, building a new facility, updating your trucks, a new pole line. And then there's the 3 to 5 year, or 3 year plus, I should say, where these are more benefits and trust structures, where longer term assets, perhaps it's a medical retiree trust, a community purpose type of account where you're looking to put money aside for strategic objectives. So those 3 buckets, when we break them down, you have operating needs, you have reserve needs, but still you've got to be very conscientious about your liquidity. 3 years and under, you don't want to be overly aggressive because you're subject to risks that may jeopardize the performance or the availability of those assets. And then when you look 3 years and out, you kind of take into consideration more total return and a little bit more volatility. So minimum volatility, 9 months and under, and that's where your banking relationships, your credit union relationships come into play. That's where you need that money when and if necessary. Those managed reserves, minimum volatility, you can kind of tweak. It's not available in necessarily right away. Probably you'll know within a month, and you can then get that money back or those assets back, and then 3+ years. So it kind of puts in perspective how you need to balance your risks, your liquidity, and your return expectations in these time horizons. Why is that important for directors? Well, you need to, in your role, ensure that the co-op is not leaving benefit trust assets in an overnight bank, or even your 1 to 3 year assets, leaving it at a bank earning 1 or 2 basis points. Each one of these segments have different type of programs that are important for a co-op and a director to understand. So building both short and long-term value for your cooperatives, let's just briefly discuss how Homestead Funds can help. And it's first and foremost aligning the goals to an investment strategy. That's where we work with leadership and the board, I stress that, to create an investment plan that can work toward your cooperative's financial goals based on your risk tolerance and your time horizons. You may be an ultra-conservative co-op, even on the longer-term assets. That's fine. We work with co-op leadership and the board to create a plan to support your mission. So we'll help you develop an investment policy statement. Too often than not, we find that co-ops don't have an investment policy statement. They may say we're open to investing in the Homestead Funds, or we're open to investing in a certain bank, but they really don't detail the type of investments, individual securities, time horizons, risk profiles, that all is encompassed in an investment policy statement. I can't emphasize enough, if you have one thing you can do is ask about your investment policy statement and how the Homestead Funds can help you create one, because it's very important. And then you create an investment policy statement, which will lead to your investment strategy. So we know what your risk tolerance is. You're very conservative, you're moderate, or perhaps you're aggressive with your longer term assets. Based upon that investment policy statement, we create that investment strategy. And then once we go through this process, and we may have investments in various Homestead Funds to meet your short, intermediate, and long-term program needs, it's important to have regular account reviews. And typically we meet in person. I highly encourage an annual board meeting to present how your accounts are performing, making perhaps recommendations on tweaking your strategy based upon how markets have performed. What do I mean by that? Let's say we had a great run on equities for a medical retiree plan, and now you're a little bit overweighted in equities. We may recommend take some chips off the table in your equity funds, put them more towards fixed income, stabilize that, and then you still keep your upside in equities. So annual account reviews ensures your investments are aligned with your financial goals. Goes back to that investment strategy, goes back to making sure that we're honoring your investment policy statement. At the Homestead Funds, we're committed to annual reviews, and if necessary, like in 2020, immediate reviews if there are shocks to the market. And that's what we're here for. Again, we're part of NRECA. We're in the service business like your cooperative. Our service is investment services. So 2 of my colleagues are going to have a breakout session as part of the directors conference. They're going to go into different types of accounts. When I talk about that short-term, intermediate-term, long-term investments, these types of accounts, corporate accounts, community purpose accounts, storm reserve accounts, retiree medical accounts, some of the things that are important in your role as a director to inquire about: what are we doing with our corporate cash? Do we have a community purpose account set up? And what does that mean? Should we be thinking about a storm reserve account? What are the implications and how do we set aside money? I can't say enough the importance of storm reserve accounts, which with everything going on in the country these days, weather related. And then retiree medical. Do you have one? How are those assets invested? So Brian Allen and Raymond Scott have a breakout session. I encourage you to join that breakout session to hear more about these types of programs. I want to thank you for allowing me the opportunity to talk to you a little bit about why it's important for directors to think about what cooperatives are doing with their investment assets and the importance of a strategy, of a policy, and then typical reviews on at least an annual, if not quarterly basis. So I appreciate the time. I wish you a great conference. I hope everybody is safe and well. This is my number. That's my direct line. That's also my direct email address. If you have any questions about the Homestead Funds, about the different programs we offer for cooperatives, about working with directors, ensuring that your cooperative is strategically aligned in their investment objectives, please give me a call. I thank you, and I hope you all stay safe and well. Bye.